Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down or sideways by taking only high probability and low risk trades that have maximum forces from the market, sector, industry, fundamental, technical and even seasonality in their favor. I will revisit some trade ideas or market analysis I shared earlier and review how that played out. If you stay with me, I will show some stocks getting ready to buy or short and some that you may trade on Monday. You could also trade them on Friday near the close if you could find them in real time using Q systems. You could. How did I decide to stop buying last week? That was a profitable decision. In the last market recap, I categorically mentioned that it is better to avoid buying, and I said that I stopped buying. I said that while the market was super bullish across the board. I did that because of a simple strategy I follow. Do not buy in an extremely, quote within quote, extremely overbought market. That is an analysis at the market level. Even if individual stocks are buyable, I avoid buying them. That was a very profitable loss avoiding decision. How did I decide that? How could you decide that? Q has some effective oscillators in the market breadth analysis. When they are extremely overbought, I stop buying. They do not need to be overbought all at once. Some or even one of them flashing warning signs is enough for me to stop buying. Which oscillators signaled caution last week? Q edges bucket analysis did that without any ambiguity. Q total view and composites and major indexes new high, new low, percentage alert cluster did that without ambiguity. Q finders weekly technical breadth hinted about that. Hindenburg in both NYSE and Nasdaq suggested caution. I pointed to each of those in my YouTube videos and Twitter posts before knowing how the market would move. Note that some of these analytics are immediately actionable, like the first two, like the first two being bucket analysis and new high, new low, percentage alert cluster. Some are cautionary signals but may not be immediately actionable. For example, the weekly technical breadth and Hindenburg. I based my decision on the immediately actionable ones, and the other signals provided further justifications. Q breadth analytics has other immediately actionable oscillators. Q also has other signals that warn us about buying at the top. Those additional signals did not fire last week. Q breadth analysis has other immediately actionable oscillators at the same time, but I keep an eye on all of them. You may learn about those from the masterclass videos on my YouTube channel, Trading Profitably. So all the oscillators, immediately actionable and warning ones, all are covered in detail, and I also discuss them regularly on my YouTube videos when they appear. I post them on Twitter when they appear. If you follow me on YouTube and Twitter, you would know that my market direction and more importantly the preferred trading direction analysis is quite effective, aka profitable. The reason for that accuracy is the Q breadth analytics. I do not trade without them. Greetings, I'm Sagar Nandi, retired IT professional, swing trading stocks in the USA as well as India markets using only one trading system that I developed myself, Q. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle Superior Profit, YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on TradeStation and Metastock platforms. It has multiple components. I'll use several of them today as I do every day. Let's start with dollar index. In the last market recap, I mentioned and I showed dollar index was very bullish, and I said if this trend line resistance could be broken, that would put additional pressure on the market. Of course, the trend line resistance in weekly chart is broken now. The corresponding daily trend line resistance is of course broken. It is not there in the daily anymore. Dollar index is now at price extreme high and also at jump thrust high. For stocks, such a move is unsustainable. Price extreme high, jump thrust high, such a move is unsustainable. We have to see whether dollar index follows the same rule and pulls back from here. It is also very overbought from the stretch indicator. If it pulls back, that may help the market. If it continues its up move, that may put additional pressure on the market. Not always correlated like that, but that is the general idea. Other than dollar index, another item that I keep an eye on to decide how the market may get influenced is the mega cap index. Mega cap index is bullish. In weekly, it pulled back little bit, but just a little bit. The backdrop color is still bullish. In daily, after bearish indecision cluster, we would expect a pullback. That happened. It was overbought for many days. The overbought condition went away and the traffic light momentum color turned red, though Friday's candle shape is indecisive. It pulled back just a little bit. It is still very much in an uptrend. There is significant distance between Friday's close and the next trend line support. I am not thinking that these trend line supports will get broken immediately. But even a pullback to the trend line supports will put additional pressure on the market. We'll see what happens, but I am going to keep an eye on the trend line supports on this instrument and also few other instruments I will show later. Market breadth, as I explained earlier, invaluable in anticipating a change in market direction. That's how I decided to stop buying last week. That was very profitable decision. This is talking about internal health, and this is a snapshot I shared last week in the market recap of total view custom index, the broadest view of the USA market. This is what I showed last week, that though market was going up, other than the pre-election results day, there was no accumulation. The accumulation happened before the election results were known. That didn't give confidence about the bullishness under the hood, and the alert that helped me decide to stop buying was from here, new high, new low percentage alert cluster. This is what I showed last week, and I decided to stop buying. How did it change this week? The same market breadth total view. After the warning cluster, it pulled back. In addition, it has displayed Hindenburg confirmed signal for 3 days in a row. What is underperforming? We can see it from here. Growth small cap is underperforming. That is something to keep in mind. Many growth stock traders like to buy small cap growth. Now that is underperforming. Growth is underperforming, small cap is underperforming, so small cap growth is underperforming. Now Hindenburg's 3 in a row this week, where did they come from? I'll come to that. Before that, let's look at the total view using at a glance weekly daily. Weekly came down little bit, backdrop color turned bearish, more cautionary signal is coming from the bearish headwind at the very top. It always comes at the very top. That's a cautionary signal. In daily, it created a false upside breakout, a cautionary signal. Traffic momentum color turned bearish, so I am not allowed to buy now. There is a trend line support, but the trend line support is some distance away. I am again not thinking that the trend line support will get easily broken, just like I explained for the mega cap index, but even a pullback to the trend line support will put additional pressure on the market. Let's look at custom indexes now. Sorry, composite indexes, not custom, composite indexes, Nasdaq and NYSE, to see where the Hindenburgs came from. It came from both of them. That causes further concern on the market. And the other oscillator that is very useful, didn't fire last week. They were not overbought. That was 3-month new high low. Also percentage of stocks above 50-day moving average. They did not fire on the extreme overbought side. Now see what is happening. 3-month new high low is coming down for NYSE, but some distance away from being extremely oversold. Whereas for Nasdaq, it has come down faster and is actually very close to being oversold. Again, a very reliable oscillator, and this is again an immediately actionable oscillator. So if it actually hits the extreme oversold situation bands and then ticks up, I'm going to look to buy. But for that to happen, it has to come down a little bit first before it can tilt up to give me a buy signal. That has not happened. It is still looking bearish. What is the market's external view? We looked at the internal health check using breadth charts from Q breadth. External view is assessed using the market ETFs. You could use futures indexes also. These are the 4 market ETFs, DIA, SPY, QQQ, IWM, using weekly interval. All of them fell last week from somewhere between 1+% to 4+%. Once again, my decision, and I shared that before knowing the results, of stopping buying was very effective. Market fell across the board this week. Let's look at the individual charts and you will see a pattern. What pattern? The same pattern that we saw in total view custom index. Similar. Here weekly came down for SPY, has a bearish headwind warning sign. In daily it pulled back. It has a trend line support, very much in an uptrend. I am not thinking that the trend line support can be broken immediately. Multiple trend lines are there as support. If a pullback happens to the support, that is also going to put pressure on the market. The traffic light color and the backdrop color doesn't allow me to buy, but there is no short setup too. QQQ, similar pattern. And one thing to note, QQQ is the only market ETF that clearly completed a false upside breakout. in weekly, daily, both of course. The same pivot resistance was there. This is the only ETF that clearly completed the false upside breakout. Backdrop color is bearish, has a bear release signal, and QQQ is underperforming the market seen from relative performance. Daily pullback, traffic light momentum color is bearish, but a trend line support is there. Again, I'm not thinking the trend line will get immediately broken, but a pullback to the trend line support is also going to put bearish pressure, not allowing me to buy. Doesn't have any short setup, still in an uptrend. Dia, similar thing, pull back little bit in weekly. Notice here the backdrop color did not change to bearish, is neutral, but has the bearish headwind weakness signal. It outperformed the market. In daily pullback a little bit, traffic light color is bearish, but very much in an uptrend, has trend line support. Trend line is further away, a pullback to the support is going to put pressure on the market. Doesn't allow me to buy, there is no short setup. IWM, again pull back somewhat, has a bear release signal, underperformed the market. Pull back in daily, trend line support is there, quite a distance away. I'm not thinking the trend line is going to get immediately broken across the board, but a pullback to the trend line support is also going to cause pain to people holding stocks. Bucket analysis, sector, industry, stock breadth using Q Edge. What did I share last week? This was another of the immediately actionable extremely overbought signal. This is from last week. Bucket analysis showed that it was extremely overbought. This is as of Friday's close 1 week ago, not this week, the prior week. And that time I mentioned this extreme overbought condition happened thrice in a row. That was another immediately actionable signal that led me to stop buying. And how did it turn this week? Notice from about 30% stocks being above upper Bollinger Band. Which stocks? S&P 1500 stocks, a nice balance of large cap, small cap, mid cap. From being 30% above upper Bollinger Band, see the percentage now, 0.6%. A huge number of stocks pulled back from above upper Bollinger Band. My timing was perfect. That does not tell it is time to short. It tells that the decision to stop buying was the perfectly timed decision. Doesn't tell me to short. And if I look at the sector industry stock breadth across different intervals, 1 month is bullish. Just look at the color balance between green and red. 1 month long-term bullish. Over 10 days, it turned more bullish. But after that, this week, 5 days, it turned bearish. And last 2 days and 1 day it remained bearish. It's continuing to be bearish, doesn't allow me to buy, allows me to short. Technical breadth invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. Last week, weekly technical breadth was looking like this. This was one of the warning signs. It was looking too overbought. It was not telling me to short, of course, but it was looking too overbought. How do I know? Whenever across the board these pie charts show about 80% or more bullish, that is too overbought. Works for both weekly and daily intervals. So this was last week. And how did it change this week? A complete U-turn. Extremely oversold now. Again, this is not an immediately actionable signal, so I'm not going to buy based on this, not going to even look to buy based on this, but it is getting oversold. And another oversold, nearing oversold situation, where did we see? We saw that in 3-month new high low in Nasdaq Composite. I'm keeping all those in mind. At the same time, the headwind alert in weekly interval usually leads to further down move in the market, especially in stocks that are at high price level, because the headwind comes in stocks at a high price level. So I'm expecting more pain for the stocks that are already at high price level. Doesn't allow me to buy, but tells me that it is getting oversold. Last week, this is last week, 9th November, this is daily technical breadth last week. I shared in the last market recap. It was overall bearish. Reversals were bearish and it was extremely overbought. This is what I shared in the last market recap and very clearly mentioned that it allows me to start to look for shorting opportunities. But I also mentioned that it was not time to short in the last market recap, but it was telling me to get ready to short from multiple angles. This was last market recap's daily technical breadth. How is it today? It's quite bearish across the board, but not oversold, because to be oversold in daily technical breadth, I need to have majority of the short signals coming from price extreme low. That is not true. Majority of short signals are coming from price extreme middle. That is not oversold. If I go back to the previous week's picture, it was overbought because majority of the buy signals came from price extreme high. That is one way the technical breadth shows overbought oversold condition. It was overbought 1 week ago, it stopped buying. Now it is bearish, but it is not oversold. Allows shorting, does not allow buying. Summary then of the market level: shorting is allowed, buying is not permitted. All four market ETFs and then mega cap index and total view index have memory trend line support below Friday's close. However, the support is far enough in several of them. In all of them, it is some distance away, some more than others, and that distance allows shorting. It's not at support yet. However, when I looked for actual 360 degrees low risk shorting opportunities combining all the dimensions, sector industry weakness, fundamental weakness, technical weakness, that is low risk short setup, I did not find many. That is tempering my willingness to short. Also noticed all the market ETFs, mega cap index, custom, total view index, all are still in an uptrend and none of them have a short setup. So all this together are tempering my willingness to short. I'm not buying now, but I am not going to short a lot too for swing trading. But overall the market is looking bearish. I'm not willing to risk too much on swing short trading, so I may fall back on intraday trading for now. The market instruments with nearby memory support are the four market ETFs, mega cap index and total view index. If the support in all or most of them holds, that may be a time to start buying again. You may keep an eye on those support levels. I'll do the same. Review of last week's trade ideas. I did not share any trade idea in last week's market recap, but I shared my bearish view on Tesla while Tesla was at the very top. I did that through Twitter here. On November 13th, Wednesday, in the morning session, 10:23 a.m. Eastern Standard Time, I tweeted this that Tesla started bullishly that day, but then it turned negative. Started bullishly, then turned negative. On the 5-minute pivot chart, which this was, if trendline support is broken, that's what I wrote, that will show more weakness. Indeed, that day after 10:23 a.m., the trendline support got broken. There was no swing short setup, and when I see bearishness in a stock that I want to short but there is no swing short setup, I can do one of two things. Either I can resort to intraday trading or I could trade that using vertical options, short call options or long put vertical options that have defined risk. So I did the same. I traded it using short call vertical. And see, this I shared in the morning session on November 13th, Wednesday. Between Wednesday's close to Friday's low, Wednesday's close price was already below the snapshot I shared. I shared the snapshot somewhere here. Price fell down. That was Wednesday's close, and from Wednesday's close to Friday's low, Tesla fell by I think 5 to 6%. That was significant drop, and I had short call verticals that had some profit. I booked partial profit in the trade. This was an example of trading with bearish view in an instrument that did not have any trade setup. And again, I shared my bearish view before knowing the results. Quite well timed, I would say. This week's trade ideas. Though the market ETFs are still in an uptrend, many stocks fell a lot last week. If you shorted during the week, I did a number of day trades during the week, made a profit. All of them were bearish side short trades. I made a nice profit. Now, it may be not easy to find short candidates where stop is nearby. I looked for such 360 degrees candidates, shorting candidates, but didn't find many. There are a few, but not a lot. It would be less risky and more profitable to short during the week. By the Friday's close, many stocks fell so much that stop is not nearby. Based on last week's market recap, you could be ready for shorting, and I did short some. Let me show one of the stocks that fell but doesn't have a low risk short entry point, and this is a representative of many other similar stocks. This is GILD, Gilid. This was Monday. Displayed a bearish indecision at the top, then continued falling for all the remaining days sharply. It has a breakdown short setup technically, but as you know, I don't suggest and I don't take trades where the stop is far away. Here the logical stop for me would be above the recent swing high, that is too far away for me to short Gilid. I could short it during the week using options vertical. I did not, but this I am showing as an example of how many stocks are looking now. It's a bit late to short now, at least for swing trading. But if the stock comes up a little bit, comes down again, that will give me a nice flow trend following short setup. I may wait for that, or if it starts to go down again, maybe trying to catch up to the trend line support, extended trend line support tilts down from there, I may trade it using options verticals or day trade. Those are the two techniques I use when I have bearish view, but I don't have a low risk short swing trade like in GILD's case. So this is not a trade I took on Friday, not one that I will take on Monday, Tuesday as a swing trade. But there are very few short candidates right now that I found, at least low risk. One is HLIT. And again, because I did not find many, that is tempering my willingness to short. Let me just show one stock. HLIT has a proper flow trend following short setup where stop is not very far away. Practically 2 candles away, daily candles away for swing trading. Target is more distance away than risk taken in the trade. That is a trade I say low risk. That is reward risks are comparable. That is technicals. Let's also look at its fundamentals and industry strength to see if it is a 360 degree short setup. connecting to icon. Give it a few seconds, please. Steadily fell from 5-day to Friday. Overvalued stock, not showing any high earnings growth, so it's a shorting candidate. Insiders are selling. 83% of peer stocks went down on Friday. That's a weak industry in itself. The industry is communications equipment. How is the industry doing relative to others? Let's look at that. One of the worst 20%, one of the 20% weakest industries, has some deceleration as well. Significantly down on Friday, 2.65%. That's an industry that's telling me to short. The stock is telling me it's shortable, and if I look at seasonality, many stocks have bullish seasonality in November, December period because of the seasonality of the market as a whole. So I'd like to see its seasonality for November, December. It's actually not bullish, neutral. That is happening when the market has bullish seasonality. So it's a 360 degrees short setup, the only short setup I'm going to share today. I did not find many also. I didn't trade it. I'll see how the market moves tomorrow and then decide what to do with these or other stocks. If you carry out the 360 analysis using Q like that, you will most likely find at least a few other trading candidates today. Some days more, some days less. Today I didn't find many, but at least a few more you could find, just as you would almost every other day. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next market recap. Have a great weekend. And as I always say, as these live examples I'm quite confident shows, there is no reason not to do that. Trade profitably. Thank you.